Ladies and gentlemen, good morning. It is a beautiful day in the Cape, and we are going to do a bit of a recording, myself and Rowen Carolus. If you've followed my YouTube channel and TikTok and so on, you know that I do these kind of interviews every now and again with somebody that knows a lot about investments. And today I am sitting with Rowen Carolus. Rowen joined our company when, beginning of the year?
Beginning approximately February.
Yeah, somewhere around there. And I might be knowledgeable on investments, but this man is knowledgeable on GEPF. So we're going to speak a lot about GEPF today. But other than above that, we're just going to have a general conversation, talk about, especially for new advisors, why he joined Heptagon, whether it is a good place to be or not to be. And just a general conversation. So we hope you enjoy it. Rowen, welkom. Baie bly om jou te sien. Lekker om by jou te kuier hier in die Kaap.
Dankie Corné, and thank you for having me. I am looking forward to whatever we discuss and providing as much value as we can to everybody watching. Thank you.
Fantastic. So I'm going to jump right in. I'm going to ask you, why did you join Heptagon? Or why did you want to join Heptagon?
To be honest, first, it was because of you. Because of the video I saw on TikTok. I always had, I believe in my mind, that I wanted to add more value and make videos. And I think I needed some guidance maybe, but maybe it was something that just happened by chance. But I believe that video that you did make, that pushed me over the edge to say, but listen, if I want to change my circumstances, then there's nobody else that I can blame for that. I need to do something about it. And I thought this would be the best new start. It would be the best. I can add value, I believe, to whichever group I joined. And I thought, but I think you and I aligned when I heard and I saw the videos that you made, and that made me realize, but this is what I really want.
Okay. Well, I do remember when you contacted me the first time and you said to me you're a financial advisor and you want to join the company, I was kind of blown away. But then I realized this is what social media has done for me. For me, it's given me a whole new access to clients and to be of service to people. But being of service to people then automatically led to clients, and more financial advisors started talking to us. And like yourself, started asking to come and join the company. So very glad to hear that you wanted to join because of what you heard me say. So what I would like to know is, just for other potential advisors that's out there, why should anybody else come and join Heptagon?
That's a good question. I think, I'm not sure if you can remember, on your video you said the advisor that joins, they need to wow you.
Yes.
And I'm not sure if you can remember that.
I do
sent
remember,
you
yes.
an email, but maybe I shouldn't share what I said because maybe somebody else is going to use that same message. But I think why somebody needs to join Heptagon Capital is, as I said initially, I think they will find their, I don't want to call it their freedom, but you will be able to learn and grow so much that you will be able to achieve whatever your heart desires. And that's what I believe that I've realized, not beforehand because I didn't know what I was walking into, but I think when I joined and now that I've been in for a couple of months, I can see the value that the Heptagon family does provide to all the advisors.
Good. And I mean, you come from a financial background, having been in the financial industry for a number of years. How would you say our company differs from other companies that you've been to? Because I know you were also in a bank at some stage, and you've been at a financial advice company giving financial advice at some stage. We won't name names. But what would you say is different to us than the other companies that you have been with previously?
I think you firstly feel as part of the whole group, and that's why I use the term family. That is the one important thing. And as I said also previously, the growth aspect. I don't believe there's a lot of companies that focuses on self-improvement and developing people, and that would be the reason that I would provide for that.
Yeah, I absolutely believe in the self-improvement. And if I listen to you, it warms my heart because it seems like you keep on touching on the culture that we've got, the culture of what we believe in, the 5 laws of value that we want to provide to people, and then the family feeling. I think it is absolutely worst thing in the world to work for a company where you're just a number and it's this cold environment. Any case, let's not go down that. Who will you say would be a good fit to come and join our company?
I'd say anybody that really wants to improve, wants to succeed, wants more than what they are currently having.
Okay.
Somebody that's, I don't want to say disciplined, but they must really want it. I think that's the most important part. If you don't really want, if you just want to call it low water, if you in between wanting and not really sure, then probably you won't be a good fit. Sorry, but I believe if something inside you tells you, but you want more out of life, you want to succeed, you want to know more about giving advice and how to give proper advice, how to grow as a salesperson, as a person in general, I would say, then definitely they would be the right fit.
Okay, fantastic. Thank you. So we've touched on this. I want to go into it a bit more. The social media. So you saw a couple of videos that I made and that attracted you. And I can be honest, I started doing the videos because I wanted to give back. I was told by my son, listen here, because he always asked me to start making videos. And I just said, no, it's not for me. Like everybody else, it's not for me. It's not the type of thing I want to do. But at the end of the day, he said one thing. He said, listen here, there's so many people that needs financial advice, but they are too scared to go out there and ask for it. So you can offer value to the community, to the population in general, if you start doing that. And that's when I started doing it. And that was wonderful. The value that I added started getting this following. But what I came to realize is the enormous marketing that came out of it. It became automatically a marketing thing with the amount of people that started following me and the amount of people that started contacting me for personal one-on-one advice. Now, you started doing some social media 3 months ago, 4 months ago? June, July, August? Yeah, about 4 months ago. Tell us a bit about your social media journey, because you have embraced it, and listen here, folks, Rowen has embraced it, and I can say, because I know what my journey was like and how I grew in terms of my following, what it did for me. I want to know from Rowen, what have you experienced in these past 4 months? How has your journey been?
It's been a crazy ride this past couple of months. I think initially I started, and this is so funny, I started because something happened, and I don't want to say exactly what, but something happened, and I told myself this is an opportunity to show people the truth regarding that situation, and I made my first video just to show that I am, you can go onto the FSC website and you can check whether I am accredited. Yes. And that was my first video. Because of something negative that happened, I thought, but let's use this as a stepping stone or as motivation to go and post. And then after that, I decided, but okay, let's continue, because I also spoke to you and you said, it's not that difficult. You just press record, and I thought, okay, I did the first one. And previously I did try, but something did not gel the previous time. Mm-hmm. And the second one, for whatever reason, it blew up, and I started getting so much questions. And I think because I saw the value that I was providing to people out there, I did it constantly, and because of that, the social media grew, the questions grew, and I even thought of a name because of all the questions. I told myself, but why don't call yourself on your website at least Ask Rowen? Yes. Because advice is about asking and about getting the answers, and that's where that also came from. So it's been, I think, a marvelous journey, and I hope and I believe that I'll still be providing value and doing this for the coming months and years to come.
Trust me, I see the work you do. You are providing value. Yeah. So yeah, it becomes this marketing thing. It's there to give people, and I think, and this is something that any advisor out there, I want to encourage you. Yes. Marketing is one of the most important things that we have to do as financial advisors, not only as financial advisors, whether you're selling cars, whether you are an accountant, whether you're a lawyer, whether you are selling houses, you have to market yourself, you have to advertise yourself. And social media is one of those platforms that you can use for marketing. So if you do it and you do it consistently, the wonderful thing about it is that it then brings clients to you. You don't have to go and look for clients anymore. So that's the first thing. If we can motivate anybody, start doing it. Now, Rowen being in our company, we've got a number of advisors there, but not all of them have embraced the social media journey. And it is understandable because not everybody feels comfortable. But Rowen has embraced it. And within 5 months that you've been doing it, Rowen has doubled, quadrupled his personal production just because he's marketing. So if we look at what social media has done for you now versus the past, what did you do in the past for marketing and how successful was it versus the social media stuff?
I think in the past, and all advisors would know this, as cold calling, calling clients, asking for referrals, and asking for referrals is always just as good. But the difference that I see in going onto social media or any platform for that matter and providing value to people, that has an enormous, firstly, reach, and I also think everybody should be on at least social media. And if I can maybe give the advisors a tip, just so how I positioned myself, I was looking and I thought, how can I become more specific or a niche in my, because I saw advisors on social media and I decided, but I want to specialize. Yeah. And because of my experiences, I thought, let me go into the GEPF, especially because I didn't see somebody doing that specifically. So I believe if you can create that market, maybe you can have the similar or even more success by positioning you as the one and only or the first of your kind.
Specialist in your area. And you're 100% right. I mean, in our industry, it's such a big industry in terms of variety. I mean, we can talk anything from medical aids and short-term insurance all the way to estate planning, creation of trusts, risks, investments, retirement. There's so much. And I do feel that it doesn't matter how knowledgeable you are. You cannot be an expert on everything. So rather find that niche, like you say, and become an expert in that. And then you know that the people that you are going to assist in that specific niche market, you will be giving them the best possible advice. And that's bring us to the GEPF that you decided on, which I'm very glad you did, because I started getting a lot of questions on GEPF and now I have to ask you. But in terms of the GEPF, just tell us, how did it come that you actually decided to specialize in the GEPF?
Okay, so this is a very personal story. My granddad, he was a principal and he was a GEPF member, and he lived until the age of 91. And while he was on his pension, I was an advisor, and I realized, but his pension fund differs from the normal private pension fund. And I decided, but maybe I should look into it because my mom and dad are also GEPF members.
Okay.
And a lot of the clients that I had at the time, not a lot, but a couple of them were GEPF members. But I started to research and learn about the GEPF. And because I never saw him struggle 1 month within that 91 years that he lived, I realized there was something there that I needed to understand, and when I understood it, I could provide the value to everybody that were GEPF members. Yeah. And that's why I decided to specialize in the GEPF.
Okay. Well, I'm going to ask you a few questions in regards to the GEPF, and I think we both have answered numerous of these questions, but I think you might just answer it better than what I do. So, we know that the GEPF is a defined benefit fund, okay, versus other pension funds, which is defined contribution funds. So, just quickly, defined benefit fund, they work in a formula to determine what your 1/3 is and what your monthly income is. So it's not reliant on the actual fund performance, where a defined contribution fund, you contribute on a monthly basis, and then at the end of the term, whatever you've built up there with growth is yours. So that's how it differs from each other. The GEPF being a defined benefit fund, What makes this defined benefit fund so great? Because we always say it's better to stay with the GPF in retirement than to move to a different fund. What, according to you, are the benefits that should keep or that should let people decide to stay with the GPF?
I think the most important thing is the GP law or the formulas that they use. And we can go not far back to 2020. No GPF member actually complained that their fund value decreased. When across the market, all investments took a drop because of COVID, because of the situation that we were in. And the GPF members did not, the pensioners did not lose a cent, GPF members did not lose a cent. So just that factor alone, if you look at 2020, would be my biggest reason why I support and I'm in support of the GEPF, is that decreasing of risk on people, pensioners, and your funds at the end of the day.
The protection in the guarantee, because that's what it's all about. The income is guaranteed. Anybody that resigned in April, May of 2020, when we had COVID, would have seen a decline in their pension fund money. They had to stick it out another 6, 7, 8 months for their pension funds to recover if they were in a defined contribution fund. But GPF members didn't have that problem. Anybody that resigned in those few months that we really had that dip, they retired with the same benefits. So the guarantee in the pension fund. What other benefits are there to the GPF that should let people consider staying with the GPF in retirement rather than moving their funds away?
So there's so much benefits. I hope I can remember all. I think the biggest one would be the spousal pension. That's a very big benefit. Also the child's pension. Also, if your child has a disability, it also counts under the child's pension benefit. You'll get funeral benefits for you and your spouse, and that income that's guaranteed for life with increases included.
Yeah, and there's the funeral benefits and the medical aid, because there's a medical aid benefit. How does the medical aid benefit work in retirement for these members?
So it's also very technical. It's going to depend on if you are retiring. If you are retiring, you need to have 15 years of service, but it does not have to be continuous service for the medical aid.
Okay.
So when you go on retirement within the GEPF, you need at least 10 years of service before you qualify for your monthly pension benefit and all the other nice to have benefits. But with the medical aid, you need to have 15 years service, but at least this does not have to be continuous. And you also...
Not continuous?
Yeah.
So you could have worked in your 20s for 5 years, in your 30s for 5 years, and now in your 50s for 5 years, and they combine that, and now you qualify.
But the last period that you do work needs to be continuous for the pension fund benefits.
Yes.
So you can work 5 years, in your 20s 5, in your 30s, and then in your 40s you need to work 10 years at least.
Okay.
Otherwise you won't qualify for your monthly pension, also not the
medical aid. Okay, so that's important for people to know. 15 years at least, and then it doesn't have to be continuous, but you have to have 15 years in total to qualify. For those the medical aid benefits as well as the pension fund benefits.
And the other thing is you'll just need to have been on medical aid for at least 12 months before you go on retirement. So you can't decide, never have medical aid, and then on the last month you want to
quickly jump in and get onto the medical aid. Okay. And then you earn from the GPF. They tell you up front on your statement, they tell you this is the 1/3 you're going to get as your 1/3 withdrawal, and this is going to be your monthly pension fund. How is the medical aid then funded in retirement?
So the medical aid is the subsidy. You'll still receive a subsidy from government in that case, but you'll need to pay the difference.
So basically, same as when you were working. It continues the same rules. Government will subsidize a portion, and you will pay a portion.
That is correct.
And there's different. It's Polbet for the policemen, for example. It's GEMS for others. So am I right in saying that there's different medical plans for different people in GPF, just as there's different retirement ages depending on whether a person is a policeman or a teacher or whatever?
I think, because it's very technical, but I've read something that it's only the GEMS that I believe that qualify for the subsidy at retirement.
I'm with you.
So, but I'm not 100% sure because it's very technical, that aspect, but I think it's only GEMS that will qualify for medical aid.
Very possible,
subsidy.
very possible. And it is like this. Look, the GEPF, the one thing we have to accept about the GEPF, GEPF covers a lot of different occupations. It's everybody that works in the jail, every policeman, every government teacher, every person that works in the government hospital, health, courts, people in our courts. So there is really a lot of difference, and the retirement ages is not the same for everybody. So some of these people can retire at the age of 60, some at 63, some at 65. So I think one of the things of the GEPF that makes it a bit difficult sometimes is exactly that. People believe that because I am a part of the GEPF, when I ask a question, it's like that for everybody. It does differ from occupation and department. There we go. Okay, cool. So let's go on to the big talking point on GEPF at the moment, the early retirement offer on the table. What is the early retirement offer that's on the table? Please explain it to us in simple language.
Okay. So first, I think I need to clarify that the early retirement is not necessarily there for the members. If you think about it, the early retirement is an incentive for the members, but it's not specifically, it's not a right, if I can call it that.
Yeah, it's not a right.
It's not
exactly.
A right.
Yes,
it's not
yes.
a right. But what it is it's an incentive for government employees that belong to the GEPF that are between the ages of 55 and 63. So the first offer is for people that are between the ages of 55 and 59, and their penalties are scrapped, and they also receive an incentive. And for those who don't know, when you are a member of the GEPF, if you retire before the age of 60, you get penalized by 1/3% for every month that you retire before that age of 60. And the other offer on the table is for any member that's between the ages of 60 and 63. And because there's no penalties, because you are already over the age of 60, you'll just receive an incentive for the fact that you are retiring earlier than you would have maybe retired.
Okay. So, first of all, when we say there's no penalties, what do we mean by there's no penalties? Because if you go and look at a statement, the statement would say, okay, if you retire at the age of 60, you would have gotten an income of 10,000 Rand a month. But now you're going at the age of 55, so you are going to get an income of 8,000 Rand a month because of that 0.25% reduction that there is. Okay. So when we say that there is no penalties, what do you mean by there's no penalties?
Okay, so this is a good question because there is actually a penalty involved, and I'll explain it a bit. But what I mean when I say no penalties, every GEPF member that retires before the age of 60 will have a percentage of their pension and their lump sum penalized because they are going reduced. It will be reduced because they are going earlier.
Okay.
So what will happen is that Treasury is going to provide the funds to the GEPF so that the penalties won't be deducted that would have been deducted because you are retiring on 55 or because you are retiring on 56. But the penalty that you do have, and why it's important to look at the calculation, is that you'll be left with less years service. And the big benefit with the GEPF is that, and their formula is determined, or your benefits are determined by your years of service, your final salary, and with those two factors, they do a calculation. And because your years of service will reduce, there is actually a negative impact. It's not a penalty, so to speak, but
you do get a lesser income.
You get a lesser income because your years of service is going to reduce. And the other factor that we also need to take into account, there will also be increases on that salary of yours. So there is a double negative impact. If your salary could have increased and your years of service could have increased, your whole pension fund could have increased.
Okay, so the incentive that we're talking about, the incentive is now the additional lump sum that the GEPF offers through Treasury, correct?
Yes.
Now, do I understand it correct? So once again, let's make use of the example of 10,000 Rand as your monthly income. You apply to go on early retirement at the age of 55. They say, okay, we are happy for you to do that. So now instead of getting 10,000 Rand a month income, you get 8,000 Rand a month income because you are going early. Then the incentive says, okay, now we go and calculate the income that you're getting less, as well as the lump sum that you're getting less, and we add it onto your lump sum benefit. So you get extra capital out. And this extra capital will compensate for that difference in income and lump sum that you would have received at the age of 60. Do I understand that part correct?
Yes.
Okay. So, having done that, the additional lump sum that's being offered, is it just sufficient to cover those 5 years of income and that little bit on the 1/3? Or is it enough to compensate for the income increases that you would have had at normal retirement from the ages of 60 onwards?
It might be in very little cases. It could be beneficial, but what I've seen by doing the calculation is that in most cases that incentive does not cover the fact in the income that you lose because of going on early retirement. But the best way to see it is to go and calculate what you would have received at 60, what is the incentive, plus what is the income that you'll receive with this incentivized package, and then to compare the two to see if it's worth losing the income for an additional lump sum. But what I've seen is that additional lump sum does not benefit most of the members.
Yeah, not always. I think now that we're talking about this early retirement, because that is the buzzword at the moment, we've had, like, I almost want to say different offers. We've had the early retirement offer that came out originally, and when we did the calculations, we felt that the compensation that a person got, the incentive that a person got, was not quite enough to make up for the loss of income. But I think with this new offer that's on the table, especially for those members that can exercise an option now in November with retirement in March, I think that we've seen that the incentive being offered now is substantially better. Would you agree with me on that?
Yes, it is substantially better.
So, folks, the one thing that we can tell you with regards to GEPF, and I'm going to try and explain it in the most basic fashion that my mind actually understands it is, let's assume you would have retired at the age of 60, 5 years from now, with 10,000 Rand a month. Normal early retirement, you will be taking 8,000 Rand home because you would have lost out on 20% for every year, the 4% that we've lost out.
Man.
So now you get your incentive, and the capital that you get is enough to make up that income as well as your 1/3. So just think about it like this. So now I start an income of 8,000 Rand a month. But every year I do get an escalation in my income, because in the pension you get your income. Now, it could be 5%, it could be 7%, could be 9%, all depends on what inflation is, etc., etc. If you go and work in those increases, you started off at 8,000 Rand, at the age of 55, you get your increases. For all intents and purposes, by the time you get to 60, you should be back up to the 10,000 Rand mark. And because your incentive has been paid out to you for this 5 years, you are then not better or worse off than what you would have been if you took normal retirement. Would you agree with that analogy that I've just explained?
Yes.
So here's the thing that we cannot ever say with any absolute guarantees. We cannot guarantee you that it is going to play out like this, because we don't know what the inflation rate is going to be, what the increases on the GPS side is going to be, what the repo rate is going to be, all those factors that has an influence. We can't tell. So in some cases, if all the factors work in your favor and you do the early retire, you might actually be better off with the annual increases come through. And on the other hand, you might be worse off. But I think with all the calculations that we've done so far, it's pretty much close. I almost want to say close enough to say, if you want to apply for the new offer that's on the table for March as well as the one for October, we're pretty confident, we're 90% confident that if you do apply for it and you get it, you're going to be pretty much the same off as if you would have retired a normal retirement age.
I think the only thing that members need to consider and we spoke about the medical aid, because you could qualify for the incentive, but then you don't have the 15-year service to qualify for medical aid.
Correct.
So it's still important to discuss this with your financial advisor, even if you think you'll be in the same position. And I think the other thing that also needs to be considered is, if you are 55, it seems to be, if you're younger, then it might be a better option to still stay a bit longer.
Absolutely.
Whereby if you are older, that difference decreases and decreases.
Yes, yeah, absolutely. If you want to go at 55, you're definitely not going to have the same positive benefit, if I could call it that, to the guy that's 58 or 59. For them, it's better, makes more sense, so to speak, to go. Okay, so Rowen, when we talk GEPF, we know that we can find the GEPF calculators on certain websites or whatever the case might be, but that GEPF calculator does not take into consideration this new incentive. People now come and they say, okay, this is what my GEPF calculation says. If I retire at normal retirement, this is what I get at early retirement, but now I'm getting the incentive. How do you calculate, or what calculators do you use to go and determine the incentive that the person can apply for? How that will, or whether that will actually make up the difference, the penalty, so to speak. What calculator do you use, or how do you calculate it to work out for people whether it's worth it to take the early retirement or not?
So Corne, I created a comparison calculator. It also includes some of the withdrawal and lump sum withdrawal tax implications, because I realized the other calculators out there are a bit more complex to use and people don't understand how to use it. But so I created a spreadsheet where I can calculate your GEPF retirement benefit, but because I don't use the accurate amount of months, mine is just an estimated benefit, but in terms of the incentive, it's quite accurate. And I created that calculator to make it easier for people to calculate, just to enter their number, their years of service and their age, and then it populates with the answer of your incentive, and then you can compare if I go now, if I go at the age of 60.
Okay. So with regards to this calculator that you've created, how easy is it to interpret it?
So I have webinars where I also teach people how to use it, but it's quite easy to use. Okay. I marked certain places where you can just enter the figures, and then I highlight what's the result of that. So there's a big heading and a highlight. So if you worked 40 years and you are 60, it will just show you just enter those two values and your age, and then it will show you what you receive an incentive of 1 million rand, for instance. So it's quite easy to interpret it. If you do have problems interpreting it, that's why I'm there. You can always ask me and I can clarify and make it easier to understand.
Well, that's exactly what I'm thinking, because I'm thinking, yes, you can go and enter the figures and it's going to kick out what the incentive is going to be and so on and so on. But I think where the interpretation for me comes in is to say, okay, this is actual retirement and the values that I can expect on actual retirement. This is the early retirement and the incentives. I need to compare these two to see how close I get to my actual normal retirement values, or how much am I losing, so to speak. And I think that's the interpretation that I'm talking about. Is that something that the calculator helps you to do, or is the calculator more just to show you the numbers?
Yeah, so the calculator is more to show you the numbers, but I think it's more important, and as you said, to discuss that numbers, if it is with me, with anybody, because not a lot of people like or understand how these values are or should be interpreted.
Yes,
so what they can do is they can contact me and I can go through the values and I can make it easier to understand, to show them, if you go on 55 and you have this incentive, what is the positives of that? And if you leave at 60, what are the positives and what are the impacts that leaving on 60?
I'm with you. And I absolutely encourage anybody that wants to go into retirement from the GEPF, be it now, normal retirement, be it early retirement, to contact Rowen. He will really be able to give you the spot-on calculations. The other big thing with regards to GEPF these days is the new formula in terms of resignation. Speak to us about this, please.
Okay, there's quite a lot of videos, and some of them are misinformation regarding people losing money from the GEPF. But the exact same comparison can be made with the 2020. No GEPF member complained because none of their values decreased because of markets.
Yeah.
So the only reason why their fund values decreased, and to make it easier to understand, I normally try to put it like on paper, your value decreased. So it's on paper that it has affected. But what in effect happened is every 3 years, the GEPF, they need to look at what is called the actuarial factor.
Yes.
Now, because they need to safeguard the total fund value of the GEPF, they need to take into consideration this money needs to be there for all of the members for the rest of everybody's lives. And they need to factor in a lot of things to determine whether they should increase that factor, decrease that factor, or keep it the same. And I think what might have had a big impact on the decrease of the factor is I don't think they realized the impact that the two-pot system would have on the fund as a whole. And I think that was maybe one of the big reasons why they decided maybe we need to decrease that, because we still don't know the impact of these two-pot withdrawals. And because they decreased that factor, your paper value has decreased, and everybody that either resigns will be affected, and everybody that goes on retirement but has less than 10 years service will also be affected.
Yes.
But if you stay within the GEPF, if you decide to retire within the GEPF, that factor does not play a role at all.
Exactly. And that's the thing, folks. With regards to the two-pot system, I don't think anybody understands the amount of cash that has been withdrawn since the two-pot system came into life from pension funds, retirement annuities, provident funds. It is staggering amounts. And I think the worst part about it is I don't think a lot of people can show anything for that money that they've withdrawn. So yes, it had a major impact. And like Rowen says, the GEPF, the responsibility of the trustees of the GEPF is to protect the fund, and to protect the fund for those people that stays in the fund until retirement, and protect the fund for those people that retire and has to get a retirement income for the rest of their lives. There's no responsibility to people that decides to exit or to end their relationship with the GEPF and to go and do something else. There's no responsibility to protect those people. And it works exactly the same in the corporate world. If you belong to a company and you decide to resign because you want to go to another company, do your own thing or whatever the case might be, trust me, that company is not going to feel this for you in terms of whether you're taking a pension fund of $1 million away from them or a pension fund of 200,000. All they care about is you want to exit, here's your money, get out so we can get the next person in. It sounds harsh to say it, but that's the thing. Employers are normally more loyal, no, not always, but are more loyal to people that stay with them, stay in their employment, and they will therefore try and protect those people and will protect those people rather than protect the people that's going to leave. So, yeah, in terms of the resignation, lots of people, 100,000 less, 200,000 less, 300,000 less. So, until, when did this new formula kick in again?
1st of October.
1st of October. Okay, so folks, if you checked your resignation benefit before the 1st of October, you would have seen it's X amount, and now after the 1st of October, it's Y amount, it's lower. But if you check your actual retirement benefits, it will still be the same. As a matter of fact, I have had 1 or 2 people that's now confirmed in messages to me that their retirement benefit have actually increased because they're a year older, because that means that they've got an extra year on their formula. So the fund is doing what it's supposed to do. It's protecting the people that stays there. It's kind of saying to the people that's resigning, tough luck. It's time to go. So what else can you tell us about the GEPF in terms of things like administration? So often we hear well, strictly speaking, a pension fund, when it pays out 1/3, 2/3, shouldn't take more than about 6 weeks to get the whole process done. But very often we hear horror stories of people saying it's been 3 months, 4 months, 6 months. I still don't. Why does that happen in the GEPF? Why do you think that it happens?
I think because the GEPF has to ensure that no fraud takes place. I think they go through checks a lot more than a normal company would. So they check it a couple of times before they do a payout. But that is also the reason why I tell people, when you apply for retirement, do it even if you do it 6 months before, just to ensure that you have given yourself sufficient time to prepare for that. And that being the case, especially with their death claims, there is a backlog, and I think there also they need to ensure that no fraud takes place. So it takes a while for death claims to process, and people need to make provision for this period.
Yeah.
Because it can take, and I've seen people wait until 2 years for a death claim to be finalized. So you need to make provision firstly, when you do go on retirement, do I have extra cash if the GEPF takes longer than I expected? And the same, if my partner would pass away, do I have sufficient capital for that period that the money does not pay out?
And folks, the GEPF is a big fund. It is a humongous fund. As a matter of fact, I think it's the biggest pension fund in South Africa. In Africa. And I think worldwide, last time I checked, it was one of the top or the biggest 10 in the world.
Yeah, I think
so. So the GEPF is humongous, okay? And yes, there's always going to be a problem with regards to administration. Not every person in South Africa is super efficient. So you do sometimes have a couple of clerks that's not doing their job. We cannot, unfortunately, as financial advisors, contact the GEPF on behalf of clients to speed things up. Or can we?
So no, we cannot really do anything in that regard. Yeah. All we can do is inform the clients, and actually I think what our job is to prepare them for that scenario, that worst case scenario, to make sure that they have provision if the money takes too long, to make sure if the partner passes that there's enough capital. I think that is what our place in this whole
Absolutely.
Ecosystem is.
And I don't know about you, but when people often contact me and say, GEPF has now taken 3 months, can you help me? Now, I can't help you, Rowen can't help you, because like I say, we can't communicate directly with the GEPF. But my recommendation is, and I don't know about you, is contact them regularly. Make yourself a pain. Write emails. Go into their offices. Don't just accept what the person at the info counter tells you. Insist to speak to somebody that's got management authority. It is unfortunate, so like I say, that GEPF is a very big fund, has got a lot of people working for it, and it is just the way it is with regards to admin, that things can stay behind. Then you must take it upon yourself. You must take the responsibility upon yourself to go and, almost want to say, bug them until you get results.
I think what they need to do is they need to contact us before this happens. When they contact us, when it has happened, it's a bit too late.
Yes.
But before the time, they need to contact us so we can make provision and make sufficient provision so that there is enough capital should anything take longer than it should.
Yes, and then at least we can walk the path with the client, and we can hold their hand through the process. So yes, very often GEPF says that they want you, if you are retiring in December, 6 months before the time they want your documentation.
They wanted 3 months before, but
3 months.
I tell them do it 6 months.
Yeah, 3 months to 6 months. And it's not necessarily that it has to be in like that, but at the end of the day, if you can get it in a little bit earlier, then at least you have done from your side what you can to be time use, so that they have no excuse not to start working on your retirement benefits. So do yourself a favor, do your retirement planning 3 to 6 months before the time.
Yes.
And make sure you submit your documentation. Then with regards to GEPF, so a lot of people always, I don't know if it's a complaint, but a lot of people always say, but I don't want to take my 1/3. I want to leave my 1/3 there and get a bigger retirement income. Now, GEPF doesn't work like that. You get your 1/3, 2/3 must go, will provide you with an income. What advice can you give people with regards to that 1/3? What should people do with it?
So important is the goals that they like to achieve. So it is different. It's going to be different for each and every individual. But the one thing they need to make provision and make provision for is firstly emergencies, because as a pensioner, no bank is going to want to assist you.
Yeah, very
in times
true.
of need. So you need something for emergency, and you need to think about legacy. What do you want to leave as a legacy? Because there's certain benefits within the GEPF that stops after a certain period of years, and I'm talking about the 5-year balance. So I think the two most important things is emergency and leaving a legacy.
And I think, folks, that's where we come in. We don't earn a cent in commission or fees or anything as to what you decide you're going to do with your monthly pension from the GPF. Where we as financial advisors earn our keep, so to speak, is on that 1/3 that they pay out. We need to help you with the necessary planning, and that is where we earn a little bit of dough, so to speak. So speak to a financial advisor, because for some people it's better to pay off debt. For other people, they need a bigger income and you need to make plans to get a tax beneficial income. For other people, you need to grow your capital and have that emergency fund. And it is very sad sometimes to see that people make the wrong mistakes because they do what they think is right, but they have not considered all the different angles. So do yourself a favor, speak to a financial advisor, let them assist you with that 1/3 planning in terms of what's going to be paying out to you. Okay, so friend Rowen, we have now spoken quite extensively about the early retirement benefit, and I think we've come to the conclusion that it's pretty much okay to take the early retirement benefit if you apply for it and if it is granted. I think that, yes, in some cases people will still be a bit worse off than if they waited until official retirement. But I think the important thing with regards to it is that every person should go and do their own calculations. Folks, if you want to retire at the age of 55 or 56 and you have sufficient funding to sustain you in retirement from your GPF pension fund, and if you feel that it's going to be better for your own peace of mind, for your own morale, then yes, then maybe you should do it. I get this a lot. I don't know about you, but I get this a lot where people say, but I can't stay in this toxic environment anymore. And you know what? If it is such a toxic environment, then maybe the money is not worth it to stick around for another 3 or 4 years. But once again, very important, speak to a financial advisor. Get somebody to just help you with some financial planning to see how close you are to your target. Okay.
I can just maybe add to that.
Please do.
Yes, I can agree. I can agree that as long as you have sufficient income for your needs, then it's not such a bad idea. But what I can also add is that not having sufficient income or any income is just as toxic as being in a toxic, even if it's not even more toxic than being in a work situation where the work situation is toxic.
Absolutely. If you think you're working in a toxic environment, okay, but you've got money as a salary to buy food, pay for your accommodation, etc., etc. If you think it's toxic, wait until you don't have work and you don't have an income and you have to live on the street. I think that is substantially more toxic. Okay, let's move on from early retirement. Let's move on to something else with regards to GPF. A lot of people, they believe that it will be better to move all their money out of the GPF and to retire in a private pension fund. Your opinion, is it a good thing? Is it not a good thing?
For most people, I would say it's not a good thing, but everything depends on a person's personal situation and their goals that they do have. There might be certain circumstances which it is better or optimal for a person to take his money away from the GPF and invest it where he receives an income from that specific company.
Yes.
But what needs to be taken into account is especially health. Because what happens within the GEPF, it's called the 5-year balance. And this is the reason why a lot of members want to leave the GEPF. I don't think people should use this as the argument why they should leave, but the reason why they want to leave is because of this. So the 5-year balance is just, so whenever you go on retirement within the GEPFs, the GEPF will provide you with the balance of your annuity paid to any beneficiaries only for that first 5 years after retirement. So to put it easy to understand, to make it easier to understand, if you go on retirement at the age of 60 and you pass away within that first year, let's say the GEPF will still provide a lump sum to your beneficiaries, and let's make it 1 million. Your spouse will still receive the spousal benefit, but there will be 1 million as an additional benefit. And as that years after retirement increases, that also reduces. So if you pass away in year 2 after retirement, it might be 800,000.
Correct, yes.
So it decreases. Should you pass away in year 6, so 6 years after retirement, no lump sum is paid to any beneficiaries. But that shouldn't be your only reason to decide that's the reason why you don't want to stay with the GEPF, because there's solutions for that.
Oh, absolutely. So, folks, I've spoken a lot about the difference between living annuities and guaranteed annuities. So the GEPF, for all intents and purposes, is what we call a 5-year guaranteed and lifelong income plan on a joint life. That's what it is. So what it means is if you take your pension fund money from a normal pension fund and you go and buy a 5-year guaranteed income, lifelong thereafter, and a joint annuity, it says that if you pass away in year 1, then the difference of income will be paid to your spouse for that 5 years. And if that spouse survives, it will pay out for the rest of their lives. If you and the spouse both pass away within that 5-year period, it only pays out for that 5 years. Now, here's the thing. People think that once they stop getting that income, once we both have passed away and that income or capital is not paid out anymore, I have lost out. My beneficiaries has lost out on my pension fund. They have not lost out. The calculation works in the basic manner that if you do pass away within the 5 years, the lump sum is paid out, the income is paid out, and your beneficiary has also passed away within that 5 years, whatever has been received from your GEPF pension fund over that 5 years, irrespective of whether you are alive or dead, has already given you all the capital that you qualify for, that you basically let's call it, have saved up in the GEPF. You have already received everything. Every year after that 5-year period that you survive and you keep on getting an income, or your spouse gets an income because you passed away, you are actually getting more. You're actually scoring. You're getting more than what your actual calculation said that you had as a capital amount. So the difference is with regards to GEPF versus private pension funds is the GEPF has just this one formula, which is ideal for members, where in a private pension fund, you've got 10-year, 15, 20-year guarantees that you can choose, or living annuities that you can choose incomes, etc. from. So, Rowen, seeing that we've now tried to explain that to people, a lot of the time people, like I just said, complain that my pension fund is lost, my legacy is lost, my children are not going to inherit anything. What can a person do that is retiring in the GEPF to create that legacy for their children?
It's a good question, Corney. And I think people make it more complicated than it should be. So an easy solution, because you are going on retirement within the GEPF, you are certain that you'll receive a guaranteed income each and every month until the day that you pass. So the one thing that you can do is purchase a life cover to ensure that your family does receive a payout even after the event of 5 years, because you know that you'll receive an income. So you will be able to pay at least, because there will, each and every month, there will be an income. And one easy solution would be just take sufficient life cover so that you leave your family with sufficient income, if that is the main query or problem that you do have, the main need that you have. and that the GEPF does not provide, and you have that problem of the GEPF not leaving a legacy, you can actually provide a legacy.
Now, the one thing over and above that, in terms of organizing a legacy, a lot of people think or believe that they will be better off if they take their full GEPF pension fund into a private pension fund and then go and do their own thing. What is your opinion? Do you think that people can actually do the same or get the same benefits and better in a private pension fund or not?
In my calculations, I haven't seen that a private company can give you that same benefit that the GEPF and that same security that the GEPF provided, especially when we look at markets and when events happen and nobody of us can prophesize, can what's the word that I'm looking for?
Yeah, that crystal ball effect, into the future.
Yes, nobody can see into the future and determine what's going to happen in the next year, if there's another black swan event or whatever may happen that affects the markets negatively.
Yeah.
And if that is taken into account, then I don't see any private fund doing exactly what the GEPF can.
Yeah. We have really done numerous calculations. I think over my term as a financial advisor, I have done thousands of these calculations, and I have never found one calculation any year in the past 27 years. I have not done one calculation where it would be more beneficial for the client to move their pension fund from the GEPF into a private pension fund. Number one, with regards to living annuities, you can't guarantee the return on income, and the drawdown rate that you have to take is too big. So normally living annuity is going to fall far short. And then secondly, with regards to the guarantees, doesn't matter what guarantee you choose, what year we're talking about, the guarantees offered by the private companies are always worse than what the GEPF gives, and meaning the client will always get less of an income that he would have gotten out of the GEPF. But I think more important, not only that, is the fact that the client then loses out on the other benefits, such as the funeral benefits, such as the medical aid. And then one of the things we haven't spoken about is disabled children and the benefits to them. What makes the GEPF good when it comes to disabled children?
So the GEPF also provides for any disabled children for the rest of their life. So when you do decide to retire within the GEPF, that is also another benefit. It's the child benefit, and if your child is less than 22 years of age, your child can also qualify for this benefit. But if that child has a disability, they will qualify for the rest of their life for that benefit, and that's also something that needs to be considered.
So, folks, yes, we don't think that the GEPF and the administration is always the best, okay? But as a fund, it is one of the best funds. It's one of the strongest funds. And we cannot speak ill of the GEPF fund. And that is why we try and convince people that are members of the GEPF to rather stay with the GEPF, to retire in the GEPF. Man, I tell you one thing, if it was so much better for people to retire in a private fund out of the GEPF, we would be making a killing because we would have all that money to invest. But yeah, we advise people on why the benefits is there, and then we advise people on their 1/3 specifically and how to make that work for them into the future.
Corne, you've asked me a lot of questions now, but there's also a question that I do have for you, especially because we've mentioned it in a meeting that we had previously. If you can just explain to me, and I think people out there would also would like to know, how investment-backed loans, how they work and what they are.
Okay, so an investment-backed loan is actually a beautiful product to be used by people that has a need for cash, that there's a need for a loan. Now, I think, Rowen, you know that if you want to apply for a bond or car finance, credit card, you've got this hoops that you have to jump through. So you have to go through this arduous process. It's tons of documentation that you need to complete. It takes a long time, lots of criteria, etc. But on an investment-backed loan, if you have an investment then you can go and you can do a loan against that investment. And the term is basically a 12-month lending term that you do the investment for. So what happens, it's a quick 2-page application form, and you can lend as much as 60% of the value of your investment. So let's say, for example, that you've got R1 million in your investment, you can lend up to as much as 600,000. Quick, like I said, 2-page document type, and then the money is in your account within 48 to 72 hours. So it's very quick, it's very easy. Now what happens is your investment of R1 million remains in the investment. So your R1 million keeps on growing at whatever the growth rate is that's in the investment. And after the year, you must now pay back the 600,000 plus the interest that you are being charged for it. You can choose not to pay back the 600,000 and just to pay back the interest and then let it roll over for another 12 months. And so you can keep on going on. The benefit of this is that the interest rate that you are being charged is substantially less than what it's going to be on home loans, on credit cards, on personal loans. It is substantially less. It's an easier process. And especially for people that need the money on a short-term basis, it is the ideal way of getting access to funds without having to disinvest their own personal investment or having to go through this arduous process with a bank or another financial institution. So we've seen that people have made use of this for a number of things. Farmers use it when they have to go into planting season because they don't want to borrow money from the bank, etc. Business owners that needs capital for expansion and stuff like that. It's the ideal way for them to. People that needed the money on short term to buy houses, to buy cars, to buy helicopters. Divorce cases where people had to pay out their spouse a certain amount of money. And it just gives the person the flexibility of getting access to funds through such a loan without, like I say, having to disinvest or go through an arduous process. And I think the good thing about the investment-backed loans is because the interest rate is so low, it makes financial sense. Because just think about this. If you have an investment that is earning a 10% return on investment for the year, and you pay back your investment-backed loan, but the interest rate is only 9%, you effectively still have a 1% net growth result. So, to me, I think especially for business owners, individuals that needs access to cash, one of the most ideal products out there to be utilized.
And I as a financial advisor, there's another benefit that I can see, and you can maybe just expand on this. Because when you make a withdrawal with investments, there is a tax implication, and I receive a lot of questions when it comes to withdrawals. How much tax do I pay? But maybe just expand and explain what are the tax implications of doing an investment-backed loan like this.
Well, the thing is, especially if you have an investment that's a LISP investment, or as we refer to it, the unit trust investment, when you make a withdrawal, the growth that you've earned on your investment, that is capital gains, and therefore you pay capital gains tax on it. So if we go back to our example of a R1 million investment, and now the investment has grown to 1.5 million rand, excuse me, and let's say you now need to draw that 1.5 million rand. On that 500,000 that you have as your capital gain, you get 40,000 rand as a rebate, and on the remainder 460,000 rand, you have to pay capital gains tax. Now, with the investment-backed loan, you don't have to liquidate your investment, and because you don't have to liquidate it, you don't have to pay capital gains tax. So that is a great benefit of having the investment-backed loan. The other thing is that if you were to disinvest your investment in order to access your cash, it means that once that money comes back into your possession and you have to reinvest it, you have to go through the application process again and the cost implication again. So there is new cost that gets involved. So by making use of the investment-backed loan, you also avoid the additional cost. So those are the two big things with regards to the capital gains and with regards to the cost involvement. If we go and we look at the other investment, your life investment or endowment, Money that you withdraw from that is after-tax money. So you don't really feel any tax effect there because the investment was already taxed inside. But once again, if you had to withdraw that money to use it and then reinvest it at a later stage, then you have to go through that 5-year term again, that the money must lie there. And once again, there's the cost implication. So it just makes sense for a lot of people that when they need money on a short-term period to make use of something like these investment-backed loans.
Okay, so it seems there's two sides, two benefits to this investment.
Oh, I think there's a lot more. There's a lot more benefits, but these are the two big ones that I see. I get to deal a lot with business owners, and business owners always needs capital to expand, to buy equipment, etc. And they don't necessarily want to go into debt with a bank, or they don't want to necessarily withdraw their own funding. So for them, it makes 100% sense to make use of something like that. Or you get somebody that just, they've been planning this or they've been thinking about it and now they want to install solar. And now they go and they say, oh shit, but it's substantially more than what I thought. Now, once again, instead of going through the process, they would rather go and do an investment-backed loan, get the solar installation, and then refund and repay that as they go, which is for them a much easier and a much more seamless exercise. Also a very cost-effective exercise to do that, rather than to do an application, withdraw funds, reinvest the funds, etc.
And I have one last question, Courtney, and I think this is also why I joined Heptagon. And that is, if you can just explain to me a bit more about Old Mutual International. Is it called Old Mutual
OMI?
OMI, yes.
Yes. Man, I love the international investments, and I specifically love Old Mutual's OMI investments because they're so cost effective. But basically, what we have to understand in terms of international investments, we've got a wide variety of ways to invest internationally these days. You can do what they call an asset swap investment, where you invest your money locally in South Africa. The investment company takes that money, they do an asset swap, and then once this is done, they invest the money physically on your international markets, be that the Dow Jones, London Stock Exchange, whatever the case might be. And then if you want to withdraw the money, they then have to release it on that side, do an asset swap back and pay the money out. So that's one form of doing an international investment.
Yeah.
But then you can also invest up to 11 million rand per year internationally, directly internationally. So the first 1 million rand, you are allowed to take and invest by SARS without any explanations or anything like that. For the other 10 million, you have to apply to SARS for that. But then you can physically take the money out of South Africa, invest it on international markets, invest it in tax beneficial places such as the Isle of Man, and then your capital is diversified and internationally invested, which gives you a much wider scope in terms of returns. Because in South Africa, on the JSE, you've only got like 300 companies that you can invest in. But if you invest internationally, you've got thousands of companies that can be invested in. So you get that diversification from a growth point of view. You also get some protection against the rand-dollar exchange rate, so that makes it ideal. And then on the investments itself, depending on how it's structured, if it's structured in the form of a life wrapper or an endowment, once again, tax beneficial because the CGT is lower. The product is structured in such a way that you can make a lot more withdrawals than what you can do in a local endowment. As you know, a local endowment, in 5 years, you can make 2 withdrawals. In that 5 years, on these international investments, you can do up to 99 withdrawals, which makes it effectively a very liquid investment. So it is the ideal type of investment for people to diversify their investments, to lower their estate duties that they're going to be paying, to make provision for legacy in terms of inheritance internationally as well as locally. So there is really a lot of these benefits. And the thing is, your minimum investment amount is 2 million rand. There is and will soon be the option to do a monthly investment up to, if I'm not mistaken, 60,000 Rand per month in order to stay within that 1 million Rand per annum limit. So 2 million and higher. And then the other thing that goes with it is the fact that once you make use of these investments, you can either make use of existing portfolios, just like you can in the local market, or depending on how big your investment is, we can actually get a dedicated, call it stockbroker, fund manager, that will structure a portfolio for you in line with what your needs is. So they won't be making use of a specific portfolio. They will go into the markets and buy shares for you directly and do it in direct communication with you. Meaning me as a financial advisor, you as the client, and the specialist, the portfolio manager, we get together, we have a cup of coffee, we discuss your portfolio, we decide which is best, where to go, what not to do, direct communication. And that all at a substantially lower cost than what your local investments are. And when I say substantially lower cost, I would say some of your most affordable investments is around about 2.48% in cost. Yes, you can get lower. Don't kick me in the teeth, because I know there's some companies that you can invest directly and then it's only 0.5%, 1.7%, long technical discussion around that. But on average, we're looking at about 2.3 to 2.5% in cost when you do these investments, these international investments, and especially if you make use of the specialist. You're looking at a cost of about 2% max. So yeah.
So I think for now, people who want to do international investments, they need to come to you. While I'm still growing. For now, I'll stick to the GEPF, but thank you for the information.
Well, I'm going to be making a lot of use of you in the future with regards to GEPF members, because this is the one thing about Rowen. Because he specializes in the GEPF, he makes sure that he keeps himself up to date. I've been surprised on a number of occasions when I've contacted Rowen and said to him, listen, I just want to find out the following. Apparently there was a new note that came out, or a new letter or whatever, and it came out on Wednesday, and Rowen's, yes, I just read it, I know what's going on. So yeah, we will keep on rubbing off on each other in terms of investments and planning. And folks, we love working together. That's the one thing you must remember. In our company, it's not every person for himself. We really do assist each other. So you don't only get my knowledge, you don't only get Rowen's knowledge, you get the knowledge from the other advisors that we have in the company. And from an experience point of view, I actually sat and just did a bit of a calculation with how much experience each of us have in the industry. And between our merry band of 11 advisors, we've got a collective of 220 years of experience. So you talk to us, we will gladly assist you. Okay, Rowen, so we have covered quite a bit today on the GEPF, but I think there's one thing that we really need to look at before we say goodbye. Divorce. Divorce in the GEPF. So I think I want you to approach it from both sides. And when I say from both sides, what is the basic rules in terms of divorce, pre-retirement, and then again post-retirement? Go for it. Tell me about it, please.
Yes, it's a good subject to cover. So divorce, first, let me just cover and explain again. And as we have the GEPF and how the benefits are calculated. So the benefits are calculated by your years of service and your final salary. And because they cannot change your final salary, they can actually only change your years of service. But what happens when you do divorce while you are still employed,
yes,
is that your fund needs to be shared with your partner. And because there's not really a fund value like a normal pension fund or a private annuity, they need to determine what is that amount that gets paid out. And because you'll be left with less, they need to decrease your years of service. So in case of a 50% split, your years of service at that moment will be decreased by 50%, and that will be paid, or that will be used actually to do the calculation for your benefits. And because of that fact, your benefits or the amount that you will have will decrease dramatically because of that divorce, and depending on your years of service, how much they reduced for divorce. In terms of after retirement, because it's a defined benefit fund and because it's a guarantee, there's no income that can be paid out to any party that does divorce. So it's a difficult situation because of that fact. I believe I read something about, but I'm not entirely sure what was the outcome, where somebody took somebody to court because of this guarantee. I can't remember the outcome, but it's a whole other situation when you are divorcing after retirement, because this benefits has already been made effective, and the benefit state that you are receiving this income for the rest of your life. There's not really a fund value available when you go on retirement, just this guarantee that is available upon divorce.
So, are you saying that if it's post-retirement and the GEPF member is getting an income of 10,000 Rand per month, for argument's sake, are you saying that if it's agreed that the spouse should get 50% of that, that the GEPF will then have to put into their system, so to speak, a 50-50 split? Or does it mean that GEPF says, oh, sorry, we can only pay out to the GEPF member, so therefore the 10,000 goes there, the lawyers has to make a different plan for the ex-spouse to receive a 50% income?
So I have not seen any option of these that you have provided us. So I'm not 100% sure how they will treat it. When I read it was that the GEPF could not provide the other party with a lump sum because of these benefits that has been affected, and because there's no fund value within the. And I think the other important thing when it comes to divorce is also, especially before retirement, is the tax implications. Because when you do when you go through a divorce and that money is withdrawn, it's taxed as a withdrawal and not necessarily as a retirement. So it's going to be more taxes involved. And there's also an implication for the main member of the GEPF. Because there's taxes involved, it will also impact his years of service, which will affect his
final results in terms of lump sums and income, etc. Yeah. And like I said, pre-retirement, the formula changes, the formula gets affected. So if husband and wife do divorce, up to that point of the divorce, the formula is then affected and changed in order to determine what the GEPF member will get and what the spouse gets. And if my understanding is correct from this, is let's say that the calculation has been done and it's been decided that the full fund value is R1 million, then the spouse's 500,000 Rand either gets paid out to that spouse who's getting divorced, or it can stay in the GEPF, but now it will only draw interest, that amount of money. It will not, like the member who is still member of the GEPF, start building up years again. Correct in that? Okay, great. So folks, there is a bit of a grey area with regards to divorces. So please don't divorce, then at least we don't have to battle through it. But yeah, there is a bit of a grey area with regards to that, and we will go and find out for you what we can, and we will come back and we will give you more concise answers with regards to divorce. But I think, Rowen, we have covered quite a bit on GEPF today. I think we've covered the benefits quite well. We've covered the formula and how it works, why the resignation formula has been changed, and then post-retirement, why it's a good reason to stick with the GEPF. Yes. Any final thoughts from your side to GEPF members?
I think most important, after all we've said, is each member needs to do their calculation, or to speak to somebody that can assist and interpret their figures for them. So when you do the calculation, you can determine if it's a good idea for me, whether it be resignation, whether it be transfer, whether it be retirement. I think that's the most important I want people to take from today is, please do your calculation and speak to somebody that can interpret that if you do not understand what the figures mean.
Yes, folks, I cannot agree more with Rowen. Please get good financial advice. And I have said it so many times, if it's necessary, get a second and a third opinion. Because unfortunately, in our industry, like in many other industries, most other industries, you will find financial advisors that are not as educated and doesn't have as much experience, and therefore they might give you inadvertently incorrect information. And you're definitely going to find advisors that is just chasing one thing, making a buck. So do yourself a favor, get a second and a third opinion so that you have proper advice and be trusted, that you feel you can trust that financial advisor that deals with you. Rowen, thank you very much, sir. I really appreciate it. It was good fun to sit with you, and I trust we're going to do a lot of these into the future. Folks, trust me, you can contact Rowen. He's got my backing 100% with regards to GEPF. He is at our company, the GEPF specialist. And we've got other advisors that specialize in other avenues. But Rowen, GEPF, absolutely. And then, last but not least, I want to thank Nitida Wine Farm. Thank you very much for the last 2 days that you've allowed us to come and spend time here, especially tables at Nitida, the restaurant. Thank you very much, folks. We appreciate the drinks, we appreciate the food, and we appreciate the facilities. You were really a great bunch to work with. We really appreciate it. Bianca, the manageress, great to meet you. And with that, we say goodbye until we do the next one. All the best. Give all.